Hello traders, welcome to another crypto market update. We got a jam-packed video for today. The fundamental side of things that we're going to cover at the beginning of the video is going to be mainly just talking about the correlation of Bitcoin and other assets such as real estate, bonds, stocks, gold, oil, and then looking at how they're correlated and what that could mean for BTC if we start seeing equities fall again. And that is my speculation, is we're having a pullback and then we're probably going to have a high probability chance that we're going to have a next leg down. But not really going to talk about equities too much. This video is going to be mainly focusing on cryptocurrencies and what they are potentially going to play a role in for this current monetary crisis that we could be seeing here with inflation happening in the near future, potentially because of all this money printing. So, it's kind of a make it or break it for Bitcoin right now. Not today or tomorrow or a week from now, but in this global macro space where, an entire globe, basically, many economies are completely shut down and basically everything is dropping. And we know that we're in a recession. And then what are central banks doing? They basically lowered interest rates to zero, if not negative, for some European countries and Japan. And they're also printing billions and trillions of dollars, depending on which country. But, printing more money than we've ever seen before in history, in modern history. So this is kind of a perfect storm for Bitcoin, and it's the true test to see its safe haven properties, because the fact that it is a store of value due to the fixed supply nature of Bitcoin is going to potentially position it to gain a lot of demand if we start to see the inflation rise. But as of right now, we're not seeing that. So let's jump right into this post here. It's pretty in-depth, and we got some good charts from Cointelegraph that they've been able to provide us. So I think that this is a really great article to understand how correlated Bitcoin is with other assets, and understanding that, we can then potentially play Bitcoin in more of a risk-on or risk-off asset, more of a safe haven, more of a speculation when there are big moves in the market. So let's jump in here. Many investors hold BTC or Bitcoin as a hedge against the global financial system. However, as the numbers show, Bitcoin has not been spared from the recent COVID-19 financial crisis. I'm going to get a little bit of coffee here, and then we'll jump right in on the blog here. This article will analyze the movement of global financial markets and its correlation with Bitcoin during the COVID-19 crisis. We'll consider the following sources as price measures for the following. So you got CoinMarketCap for BTC, you got Vanguard Total Bond Market Index for the bonds, you got the S&P for stocks, you got the COMEX Gold Futures for gold, you got Dow Jones US Real Estate Index for the real estate, and then you got the crude oil futures for the oil prices. So this is our first chart here. This is a rolling 7-day change. So this is the amount of price change in 7 days of these different financial assets in terms of a percentage, meaning zero, there's no change whatsoever. And then obviously with a price increase, it goes up, and decrease, it goes down. And this is a daily change in a percentage. And as we can see on the right here, you got all your different asset classes. You got cryptocurrencies or Bitcoin, you got real estate, gold, stocks, bonds, and oil. So we can see this is basically all of 2020 we have so far. So it's a good understanding because, pre-February, there wasn't a whole lot going on. Everything was, I can't say normal, but it was a lot more normal than we're currently seeing it right now. So let's just talk about what we see. Since March, we can obviously, the first thing that we can understand is Bitcoin is super volatile. It's seen the lowest low of negative 6%, daily change as a percentage, and then we saw a high of plus 4%. So Bitcoin's definitely the most volatile out of all of them, and oil's actually not far behind. Oil usually doesn't drop as fast or is not as volatile, but in recent weeks, obviously we've seen it drop from $60 to $20 in a very, very quick amount of time. So we saw that right here as well with the huge drop, and then there's that big rebound from $20 all the way up to around $28, where we're currently holding right now. And then less volatile, you got stocks in there kind of in the middle, and then gold's relatively stable. We see that in blue, and then bonds obviously very, very stable with it in orange. Really not going to see any change compared to things like Bitcoin and oil in even gold, which is more volatile than bonds, are probably one of the most stable assets, basically, compared to the ones that you see in this chart here. So the recent crash has really challenged Bitcoin's claim as digital gold and puts its assertion as a financial safe haven asset to the test. It definitely does, but we'll talk about how gold hasn't really seen a whole lot of buy pressure yet either. So it's not like it's just Bitcoin that is suffering this depreciation in value, especially when it should be time, and the macro outlook definitely positions Bitcoin for potential huge price appreciation, in my personal view. All right, so this is the standard deviation of financial assets for the rolling 7 days. And basically, the higher the number, the less, I guess, the averages away from the average. I'm sure you know about standard deviations and where the mean is. But yeah, if you don't, simple Google search, we can see Bitcoin and oil has really been an outlier with it almost quarter of a point here. Well, basically a quarter of a point for Bitcoin. But other than those two peaks, there hasn't been a whole lot of change here. But Bitcoin and oil definitely seen a lot of significant volatility and a huge outlier in the standard deviation compared to the other assets. So in the 21-day rolling correlation graph shows that Bitcoin has recently become increasingly correlated with global financial assets. Yeah, definitely, as we can see. And then this is going to be, this is for this chart right here. The statistics should be worrying some for cryptocurrency investors trying to find a respite in the midst of all the financial chaos. So this is going to be Pearson's correlation coefficient. So let's take a quick look at what this is. So basically, when it is -1, as we can see right here, this is in the negative. So this is 0.75, negative 0.5, negative 0.25. When it is negative, it is a strong negative correlation, which means, let's say if the S&P goes up, gold goes down. That would be a negative correlation. And then let's say if the S&P goes up and real estate goes up, that'd be a positive correlation. And the bigger the number, the more not greater, because it's negative. If it's closer to 1, it means it's a stronger positive correlation. If it's closer to -1, there's a strong negative correlation. Oops. And then if it's 0, there's no real correlation. There's no relationship between those two instruments, basically. So that is Pearson's coefficient correlation. So we can see right here, this is a 0 right here. So this would be no real correlation. So we can see that at the start of March, kind of into the middle half of March, we see that bonds and gold is very negatively correlated with Bitcoin. But as we can see, real estate and stocks are positively correlated with Bitcoin. So what does this mean? As of right now, just from February 1st to where this chart is closed off, we can see that real estate and stocks have a positive correlation to Bitcoin, which means if real estate and stocks go up, just looking at this chart and looking at the data, there's a higher probability of Bitcoin to be going up as well. And then on the kind of vice versa side of things, bonds and gold, there was a negative correlation when there was that huge surge in sell pressure in the equities market. So just looking at this chart here and gathering data, we can see that Bitcoin is actually more correlated with the stock market than it is with gold, looking at the previous price action. So it's a risk-on asset, basically. People are using it to speculate and not using it as a store value as of now. This is the information I've gathered from this post as of this far. So, has gold fared any better? Before we give digital gold such a hard time, we should note that physical gold hasn't sheltered investors from this financial storm either. Definitely very true. Correlations between gold and other financial assets have also soared during this time, signaling that the world's financial markets are more interconnected than ever before. So it's not just Bitcoin. We are all seeing, or we're seeing an entire series of asset classes become more and more correlated as there's globalization, as there's more interconnectedness between asset classes, and we can see that right here. This is the Sharpe ratio. If you don't know the Sharpe ratio, we can have a quick description right here. I'm not going to go in depth as to what the variables are, but the Sharpe ratio describes how much excess return you receive for the extra volatility you endure for holding a riskier asset, which makes sense, right? You need compensation for the additional risk you're taking for not holding a risk-free asset. So basically, the higher number, the better. Above 1 is solid, but as we can see, there's nothing really above 1. So basically what you're looking for is a higher number, the better. Negatives are not something that you're wanting to look for. So in this chart, we can see that bonds actually seem like they were the best investment in terms of the Sharpe ratio during the worst of the first leg within the breakdown for the stock market, and we can see that right here. And oil really was a terrible, terrible investment just in terms of the Sharpe ratio. Looking at it almost at negative, or at negative 0.8, which is obviously not great. But yeah, as we can see, bonds have been doing fairly well, sticking above 0 for a little while, but they have gone under. But right now, basically every asset class is under 0, which is not optimal. Gold is slightly above, but you're seeing, Bitcoin, bonds, stocks, real estate, all under 0. So they're all not doing fantastic. There's no one asset that is just absolutely booming at this point in time. It's a pretty deflationary spiral we're currently in right now. The only asset that's actually doing well is the US dollar, right? Because think about, if you wanted to sell real estate, maybe not in anywhere around the world, but in the United States, if you want to sell stocks, Bitcoin, bonds, gold, oil, all these assets, what are you selling into? You're selling into the US dollar, right? And that would be buying the US dollar. If you're buying stocks, you're actually selling the US dollar, right? So you're not shorting, but you're selling the US dollar and going long an equity or an index. But let's say you're selling, that means you're selling the equity and going long USD. So when there's massive sell-offs, there's an immense amount of people longing the US dollar, which is right now what we're seeing, where the US dollar is getting very, very strong, lots of buy pressure, and that is causing a problem for the emerging markets and for the other currencies that are going down significantly. We see that in Canada, Australia, and yeah, it's definitely a problem for the US. They have a privilege, really, because they are the world reserve currency, and they're lucky in that aspect. All right. So that is going to be the Sharpe ratio for all the financial assets here. As we can see, we talked about that. And this is gold's 21-day rolling correlation with other assets. So as we can see, this is just a correlation looking at the Pearson's correlation coefficient. Like we talked about, negative is a negative correlation, positive is a positive correlation. The closer to 1 or negative 1, the stronger that correlation is, with 0 being no real correlation really whatsoever. So, as we can see, when we first started the year, we can see stocks and gold kind of come together. There's not a whole lot of correlation in the first 2 months, really. But once we started to see the fall of like late February, start of March and onwards, we started to see basically all assets fall except for bonds. Bonds is the blue one right here, right? So bonds was relatively stable except for the last little bit here, but they've been relatively sideways. But as we can see at the start of March, literally everything fell. You see real estate drop like a cliff. You see oil drop like a cliff. Gold's been slowly heading down for a while here. You see stocks absolutely fall off a cliff. So all of these assets were it was all deflationary right here. End of February, start of March. And then once we saw the middle of March, maybe the 12th, 13th, right around here, you really see the biggest bump in all asset classes. So as we can see right here, you're seeing pretty well a drop perfect correlation with gold, stocks, oil, and real estate all coming together all at once. So yeah, in this time, everything is very, very correlated. And as you can see, by the end of March here, you're getting a correlation with other assets of positive 0.8, which is very, very high. 1 is the highest for Pearson's coefficient correlation. So at it, almost at 1 is very, very correlated. So the way I'm going to view the market, because we are in the global macro space as well, is I'm going to take this into account and understand that we are in a very correlated market right now. And it will separate and it will detach, in my opinion, but with so much emotion, with so much panic, I'm going to take this pretty slow. And I think there will be a divide, but that will only be when the investors around the world will start to understand the inflation in the United States dollar, which we will be analyzing that very, very carefully. So that's, in my opinion, the main thing we're going to be looking for. Is right now there's a huge flood for the US dollar, and then this current correlation with gold and Bitcoin with other assets will kind of decouple and detach once there is a worry of inflation within the US dollar, in my personal opinion. But right now, we're going to play it as kind of a very correlated sum of asset classes. All right, going to get a little bit of coffee. This is a really interesting chart. So let's look at the importance of low or negative correlation. And this is the portfolio with Bitcoin. I'm going to get a little bit of coffee and then we'll jump right in. All right, so we can see 1-to-1 Bitcoin and Bitcoin. Obviously, Bitcoin is going to be 100% correlated with Bitcoin. That's what it's representing. Bonds are 100% correlated with bond. That's why it is 1. And then you see some other numbers right here. So I don't exactly know when the time frame was. That would be really interesting to know. I would assume that it's the same time frame as this, but it doesn't say exactly what time frame this is. So that's very important. But just looking at what we can see right here, some very highly correlated assets here. As you can see, real estate and Bitcoin sitting at almost 0.9. So real estate and Bitcoin are very, very correlated at this time. You see stocks and Bitcoin pretty well correlated at 0.75 out of 1. So that's pretty well correlated. And then you don't see that much correlation with bonds, 0.36, and with oil, 0.35. So it is still positively correlated, but not nearly as much as real estate and stocks. They are going to be very, very correlated with Bitcoin, surprisingly. And gold is actually far less than even bonds and oils put it together. Gold's the least correlated out of all these assets, really, out of oil, real estate, stocks, bonds, or gold. I would assume, if I didn't have this chart, if you asked me at the start of 2020, I probably would have said gold. And I probably wouldn't have said real estate. That would be my last pick. But surprisingly, at this point in time, with the price action, with the data, Bitcoin has the most correlation with real estate out of all these different assets. Very, very surprising. And then let's continue on here. Let's just look at some of the negative correlations with stocks. No real surprise that bonds have a negative correlation with stocks. Not a significant amount, negative 0.2. Same as gold, negative 0.21. Not a huge amount of correlation with stocks, but obviously real estate and stocks have an extremely high correlation of 0.94. As well as oil, 0.8. That's pretty high. And Bitcoin 0.75, that is pretty high too. So in my opinion, this is a really, really good understanding of correlations, what they mean, and the different asset classes that we're looking at, and how this all kind of interconnects. So yeah, mainly just looking at the Bitcoin row, but yeah, I was definitely surprised to see that stocks and real estate were the most correlated, and gold was actually very, very not uncorrelated, but has a very reduced amount of correlation to what we're expecting and what we want compared to stocks and real estate, basically. But yeah, definitely something to consider. All right, so the next thing, Harry Markowitz, the father of the modern portfolio theory, postulated that most important aspect of risk to consider is an asset's contribution to the overall risk of the portfolio rather than the risk of the asset in isolation. Therefore, a portfolio is not riskier if it contains Bitcoin, which is a more volatile asset and is uncorrelated or negatively correlated with the other holdings in the portfolio. So, in that said, just by looking at the correlations in this chart, theoretically, you wouldn't want to own Bitcoin in stocks or Bitcoin in real estate because they're very correlated. It would make sense to potentially own, for example, gold in stocks because they are negatively correlated, so you're a little bit hedged. If stocks go down a lot, Bitcoin's gonna, or sorry, gold is gonna go up a certain percentage because it's a negative correlation, right? That is what you're looking for to get a hedge. If they're both going down the same time, if they're both going up the same time, you're just gonna get a double whammy whenever it goes a certain direction. If it's negative, obviously you're gonna suffer a lot of pain from that. So, uncorrelated assets are the envy of portfolio managers because they can reduce volatility and improve risk-adjusted returns. Many portfolio managers keep Bitcoin as an alternative asset in their portfolio for this reason alone. If Bitcoin does not remain uncorrelated with the rest of the financial market, then it may be viewed as a significant less desirable, risky asset by asset managers and the institutional market. A decrease in institutional interest could mean large sell-offs and fewer fiat inflows into the market. Oh, excuse me. Yeah, I do agree with that. If Bitcoin does not stand to become a safe haven asset, it's not going to be tomorrow. It's not going to be a week from now. But it's going to be when the velocity of money starts to bend to the upside, the CPI numbers start to increase, indicating inflation levels, and you start to see the US dollar weaken. I think that is when you will, that's going to be the absolute perfect time for Bitcoin to really emerge as a safe haven digital asset that is going to be very scarce and very desirable for for many generations to come. But yeah, this is really the true test here. You couldn't really think of a better situation to either make or break Bitcoin. So far, this is not the case. So this is now going into the Sharpe ratio of kind of looking at stocks and Bitcoin and how they would be in the same portfolio. So this is the perspective within the last 3 months, also within the last year. So we can see right here the Sharpe ratio for stocks and Bitcoin. So we can see, so like I said before, Sharpe ratio, you're not looking for negative. Positive would be better. This is the ratio describing how much excess return you can receive for the extra volatility you endure for holding a riskier asset. So this is stocks. Obviously, a negative Sharpe ratio is not a positive thing. So we can see from January of 2020 into the end of March, so basically Q1, we can see that Bitcoin actually had a positive Sharpe ratio. So that's a good thing. And stocks had a very negative. It was well below -1. So that's negative. In this chart, stocks were a very unprofitable investment, as we can see. And then from March 1st of 2019 to March 31st of 2020, so basically a year and a month, we can see that Bitcoin was actually a very, very positive Sharpe ratio of 1, just under 1, and then stocks were actually negative still, even after a full year. And then we can see if it's 80% stocks, 20% Bitcoin, which is the blue, then you get a little bit better of a gain and an ROI in terms of your overall portfolio. And then we didn't talk about it, but we can see that the stocks really, really pulled down that Sharpe ratio when we combine the 80% stocks and 20% Bitcoin. So just in terms of 2020 and a year and 1 month, Bitcoin still is a better investment than stocks, which would be the S&P 500. And then as we can see in the Sharpe ratio for March 2020 to March 31st of 2020, so this is going to be just the 1 month of March. This is where the most carnage has taken place as of now in terms of the stock market, in terms of the overall economy. And we can see yet again the Sharpe ratio presents that Bitcoin actually was the best asset to invest in out of all three. And we can see the 80% stocks, 20% Bitcoin portfolio performed the worst in terms of the Sharpe ratio, had the worst excess returns we receive for the extra volatility we endure for holding a riskier asset compared to Bitcoin. So Bitcoin actually, just in this chart, shows that it is overall has a better Sharpe ratio compared to the overall stock market. Definitely something to consider. Let's continue here. If it's true that Bitcoin has remained a relatively detached and uncorrelated asset in the times of economic prosperity, but that's not enough. For it to be considered a true financial safe haven, it must be robust against shocks reverberating through the other financial markets, especially in times of turmoil. The asset's price performance should be placed under heavy scrutiny. Yeah, I do agree, but like I said before, gold is also suffering from some pretty major pullbacks and not really seeing that bullish push that we're looking for or what many investors were expecting. So there are going to be some lags where you're not going to see gold react right away, but it's over a period of time that you really start to see gold take on its haven attributes. So yeah, this is the Bitcoin price index. As we can see, it's actually doing pretty well. We'll talk about the charts within the video, obviously, with after this news outlet here. So nevertheless, Bitcoin's recent price rally has shown signs of promise. This may provide hope to cryptocurrency holders, especially if other assets continue to tank. Do cryptocurrency indices provide better diversification? This is also another question that I'm sure a lot of investors are thinking about. Not investing in the actual digital asset, but investing in equities and investing in companies that are within the cryptocurrency sector. So I'm going to get a little bit of coffee and we'll jump right in. All right, so there's different indices. There's a HODL 30 index, there's a HODL 10, there's a HODL 20, but basically it's the 10 largest companies, 20 largest companies, 30 largest companies, just like Russell 2000, S&P 500, all these numbers mean something. So the HODL 30 index, a portfolio comprising the top 30 cryptocurrencies by market. Never mind, this is still cryptocurrencies. I thought this was an indice. Coinbase index, that's what I was looking for, so my bad. This is the top 30 cryptocurrencies, top 20 cryptocurrencies, and top 10 cryptocurrencies. So it's still cryptocurrencies, and then the Coinbase index is going to be, I believe, the index for actual cryptocurrency companies. So let's continue reading over. That was a misread on my fault. So the HODL 30 index, a portfolio comprising of top 30 cryptocurrencies by market cap, was less correlated to the overall financial market than Bitcoin. So if you're comprising the overall cryptocurrency market, looking at all the different altcoins, not just Bitcoin, it's going to be less correlated than if you just held Bitcoin. The correlation between the index of American stocks was significantly lower than the correlation between Bitcoin and the US stocks. So as we can see, if you're holding altcoins, you're going to get less correlation to the overall stock market, to the traditional markets, which do make sense because a lot of these traditional market investors are probably going to have some sort of hedge against Bitcoin, but then the more active altcoin users aren't really going to be so much traditional investors. It's going to be more like niche, more crypto, less equity, I believe, because once you dive into the rabbit hole of cryptocurrencies, I feel like a lot of people shift their bias as to the level of investment that they're putting into kind of indexes in the US stock market. Just personal opinion. So we can see right here, if cryptocurrencies investors will shield themselves from global market fluctuations, indices may become increasingly relevant. Correlation between financial assets. So this is the HODL 30. So this is the 30 largest cryptocurrencies grouped together, and this is just Bitcoin. And this is also the Pearson's correlation coefficient. So this is comparing the overall 30 largest cryptocurrencies versus Bitcoin and seeing the correlation between them. So as you can see, for bonds, pretty well correlated. The altcoins are more correlated than Bitcoin for bonds. We can see the HODL 30 is very, very uncorrelated with stocks, which is a good thing. That is what we're looking for, right? Because of the fact that if the stock market goes down, when traditional markets goes down, that is when you're wanting your safe haven assets like gold, silver, and hopefully cryptocurrencies. But we can see for the HODL 30, the 30 largest cryptocurrencies are able to provide a less less correlation between the stock market, which is a positive thing. And then go to gold. This is going to be the key one. We can see there's a decent correlation between gold and silver, positive correlation compared to what we saw just for Bitcoin. So this is actually a really positive thing for individuals who are holding altcoins, not just Bitcoin. So yeah, altcoins do provide what it seems like more of a safe haven, uncorrelated type of characteristic as an instrument compared to Bitcoin itself. And then the correlation between oil, very, very negatively correlated here. So that means if oil goes up, there's a high probability, or there's a probability of these cryptocurrencies actually going down. So definitely good to see gold having more correlation with the HODL 30 indices, or the 30 largest cryptocurrencies. That's giving me a little bit more of a positive light in terms of where the cryptocurrency market is going to be going if we start to see the traditional markets take another dive down. So the final thing we're going to talk about, time will tell whether Bitcoin or any other cryptocurrency will live up to investors' lofty expectations as a financial safe haven. In a tight-knit, interconnected financial system, such a thing may prove impossible. Perhaps the culling of fickle cryptocurrency investors during a time of crisis will leave only the strong and sturdy, dampening future volatility. So we will see how it goes, just in terms of what we gathered from that post. In a nutshell, I do think that, like we said before, Bitcoin is still a risk-on asset, and investors are still using it as speculation, not as a store value, in my opinion. We've been talking about this for a while, and this is more in terms of the macro or global macro aspect of when we think that Bitcoin will start to see the shift from more of a deflationary kind of lower low, low, high structure into the potential bull run that we're expecting. And that shift will potentially come when we're going to have that second drop. I think that there's going to have more pain in the equity market, which means that there's going to be another drop in Bitcoin, because they're pretty highly correlated, positively correlated, and the drop will come in the equities, in my opinion, and it'd be, you know, a worse drop than what we saw in the first part of March there, and that's going to be the next drop for Bitcoin. And then, you know, obviously central banks are going to have to overreact yet again, print more money, more trillions, dumping it into the economy. And the only time that I think Bitcoin will start to see its true safe haven, fixed supply characteristics and attributes is when investors around the world get worried about the US dollar devaluing or inflating, right? Printing money is debasement. You are debasing the currency because you are incorporating more supply without really any more demand in a way. So, you know, there's two parts of inflation: velocity of money and supply of money, and we're just so going overboard with the supply of money, but then the velocity of money is actually counteracting the increased supply of the circulating amount of currency. So you're not seeing that much inflation right now, but at the end of the day, the economy will inevitably go back to normal. I don't know how long it's going to take, but there will be a time when the economy will go back to normal, but then the amount of circulating supply, the monetary base, is substantially increased. All you need is the velocity of money to start to increase. And the velocity of money is like momentum. It's hard to stop, right? If people start exchanging currency a lot more, and then you start to see inflation, people will want to use that currency now and not wait for a week, a month, because they know that the value of the currency will go down by the time they want to buy that item a month from now, a year from now, whatever the case may be. So it's a spiral that it's very, very hard to get out of when inflation starts picking up more than the 2, 1.5%, 3% or whatever the central banks are looking for. When you start to see inflation pick up, it is very, very difficult to wind it back down, especially because the current economics and the economists, sorry, I should have said economists. The current economists in the central banks in the United States are Keynesians. What does that mean? They think that bear markets are preventable. You don't need economic corrections or compressions or anything. It's just forever expansion. And if we see any sign of negativity, any sign of negative growth or growth that is not, as to our expectations. Let's stimulate. Let's print more money, lower interest rates, lower taxes, and their idea of inflation is very skewed. Basically, they think that inflation is impossible. They just print as much money as they need, and if that doesn't work, they'll just print more money. That's the only thing that they're going to do, literally. They say, oh, we'll try this stuff, they'll try that stuff, but basically the only thing that central banks are going to be doing at this point is printing money. Have a problem? Print money. Have a problem? Print money. Let's just throw money at the problem. That's all they're going to do. So, think about it logically. Supply and demand. That's where Bitcoin comes in. That's where gold comes in. So, we'll see. But until that occurs, until we see that huge shift where global investors are worried about inflation and debasement of the US dollar, I do not think we're going to have some crazy bull run, because there's no fundamental factor that would drive investors to Bitcoin. There really isn't. Yes, as cryptocurrency enthusiasts, we know the inherent value that Bitcoin provides and blockchain is able to provide us. And we know the flaws of the monetary system. But if you are a traditional investor who's been profiting off buying the dip and share buybacks, and you're part of that whole traditional equity perma-bull psychology, you've been profiting off of this artificially low interest rates, QE, pumping up the stock market, in the real estate market, and you're doing fantastic. The last 10 years has been nothing but growth. You're pumped. So getting someone telling you that that way of life is no longer relevant, I don't think is going to come easy to a lot of people, and they're going to be stuck in their ways. They're going to do the thing that has been rewarding them for the last 10 years. And it's going to be a huge shift, in my opinion, but it takes a long time. It's a entire population of people who are going to slowly lose confidence in an asset. And that takes time, right? That takes a lot of printing. That takes a lot of awareness from a lot of individuals within an economy to kind of come to the consensus that, holy shit, the only thing that this value is held by is the confidence from you and me. And once that vanishes, I can't do anything with it because they can print more money. So, that's the global macro side of things. I think it's still too early, but I think the ability for Bitcoin to become maybe not like a global currency, but as a world recognized safe haven asset that is a gold 2.0 in a digital form, could still be a idea that could come to fruition. In my opinion, it's still a possibility. It's not out of the window yet. Don't get your hopes too down. I know that it's not been perfect, but this bear market is a long, rocky, volatile, unpredictable road, but we understand the larger picture and perspective of the overall market. So hopefully you got some value from our more fundamental news-driven side of the crypto market update. I will now go into the charts like always. Not a whole lot to talk about. We saw some alts absolutely explode. A little bit surprising, to be completely honest. I do wish I rode some of these alts a little bit more. I didn't really take any trades on the alt. I'm mainly just trading on BTC, and I can't complain about a 7.5% profit as of right now and zero risk on the table. Who can complain about 7.5% with no risk on the table? No one can. But look at some of these alts that we're going to cover here. Very, very strong push to the upside. I do think it was a little bit of a short squeeze, but then also a lot of people who are writing that this is the complete bottom of the stock market, the cryptocurrency market. And there's definitely a lot of people who think that the bottom is in. Going to get a little bit of coffee, and then we're going to get right into the charts here. All right. Let's now go to the daily chart. We like stepping back and looking at the larger time frames of the market before diving right in. So let's get the weekly chart really, really quickly. Not much to talk about. We're still below our $77-ish $100 level of resistance. This is going to be the main level of resistance we're going to be looking at. $77, $78, $100 zone is going to be key level of resistance for our chart right now. Jumping to the daily, we can see that same zone at around 7,700, and we're still seeing these strong higher lows coming into the market. But what have I been saying before? We're in a long run. We're in a long right now. So we're making money on the upside. But in my personal view, we've been having this bias for weeks now. I think the next leg will come down. Have you, maybe you have, but I've really backtested BTC, and almost every single time we get a massive drop, there's some level of a base that gets formed. We can see, just looking at 2019, big drop from 96 all the way to the 78s, right? We had a huge drop down, and then we held a base, right? We formed a base, a floor of market structure. And then we fell from 95 all the way to 68. Huge fall. And then we formed yet again a base. We had an ascending triangle, ascending wedge, broke down significantly, and then we formed a base, reverse head and shoulders, right? Strong reversal pattern for a base, right? Looking at all the way back in 2017, right? Huge drop from 63 all the way to 32. It wasn't a V-shaped recovery, right? Slam, our first major pullback. A slam again, another pullback, a slow fade, and then you start to see higher highs and higher lows after the base is formed. My personal view, there are times, yes, where you get these massive pullbacks where you see a huge pull to the downside and then you get a huge pullback, but this is a different time, right? This is a different time compared to where we are currently right now. This is the start of the biggest bull run in crypto history we can see, right? So the structure, the market maturity is very different. And in my personal view, looking at what we've seen in the past couple years, right, in a similar market structure, more of a consolidation. We're not at the bottom, just breaking all-time high, starting a massive bull run. We're in a very different stage. So in my view, we're not going to get the V-shaped bottom that we're going to recover super quickly and come all the way back up. We're going to have some sort of base that we're creating, which means we're probably going to test $5,000 again, which is also meaning that we're going to have a really, really good opportunity for a short, potentially, if it does come into fruition, that we're going to have another base hold. So as of right now, we are still continuing to have our short-term long bias because we still see the price move to the upside. This was an ascending wedge, but as of right now, I'm just drawing a nice ascending trend line, and that's all I'm drawing on the chart. Not more to talk about on the daily. I'm basically going to have that bias. My overall sentiment is short, but this is a counter trend trade that I have some money in, and if it starts to really, really hesitate, I'll take it out. I'm happy with not an amazing risk reward, but at the end of the day, this is a contrarian trade, meaning it's opposing my larger bias, which is a move to the downside. All right. Not much to talk about on the CME, just looking for gaps, not a whole lot of gaps here in the markets. Let's now go to the 4-hour chart here. So this is the entry that I got on the 4-hour chart, and we can see it hasn't really fully hit my take profit. I got a risk reward of 2.4, or just under 2.4, and I moved my stop loss right to break even, so now I'm risking absolutely nothing on this trade. I'm still going to be a little bit more patient, but let's just talk about more broadly what we're looking for our short, because we've been talking about it for such a long time, really. So let's talk about it right now. Let's take a picture. So we entered right here, and we're looking to take profits at the $7,700 zone. If it doesn't hit right at the zone, I'm not going to fuss. I'll take my profit and move on. Like I said before, the $7,700 zone is the very key level of support, which is now going to be a new level of resistance that we're going to be seeing. So right now, my view is that this $7,700 zone is a key level of supply. And I'm going to assume that there's going to be sellers at that zone. So I don't want to really look for exposure too much above this zone because I have a high probability, in my view, that it's going to reject and come back down. And then what we're expecting, what we're hoping for, is for the price to stick below the $7,700 zone, get squeezed into the apex of the price action pattern, which is this ascending triangle. And once it breaks, we have a high probability situation to be looking for a short. And then we got a nice something along the lines of that. We're at a key level of resistance, which is going to be acting as a support around 68 800 around there. So that's going to be the major support zone that we're going to be looking for potential break to really confirm that trend to the downside. But yeah, we'll see what grows. If it continues to go to the upside, we'll look for another market structure horizontal zone, probably somewhere around there maybe. So if it does come back up here, that could be something that we're looking for like that. And then we're looking for a resistance from this previous zone right here. But overall, that's my view of the market. I'm going to hold on to this trade a little bit longer because I think it could squeeze a little bit higher to the 77 or close to the $7,700 zone. But yeah, if it does hit that zone, I'm going to be pretty patient because the discussion we have with the correlated markets of the S&P, it was like 80, what was it? Let me just look here. Let's see what the correlation was with the overall stock market. I gotta change the TikTok so they can't see it. The correlation of stocks and Bitcoin is 0.75 out of 1, meaning 1 in 1 is 100% correlation. If you're comparing Bitcoin to Bitcoin, it's going to be a 100% positive correlation, right? If Bitcoin goes down 5%, Bitcoin is going down 5%, right? As simple as that. And the fact that stocks is 0.75% correlated with Bitcoin, that is like staggeringly close. So in the short term, with this data we can see right now, it makes sense to look at the stock market for more of a leading sympathy play or a front runner. We'd be looking at the S&P instead of looking at gold, right? Gold would actually be way less positively correlated. It's only 0.23, right? So yeah, looking at different stats, trying to understand more of the global macro space, not just the cryptocurrencies, that I think will be very beneficial because in this market, everything is interconnected, right? Like look at how many asset classes are absolutely dumping because of this deflationary spiral we're in right now with COVID. So yeah, if the S&P goes down, I think that BTC will go down as well. In my view, that S&P will go down is pretty strong. Obviously, no one has a crystal ball and no one can tell exactly what will happen, but our view is that we will hold this long for a little bit longer for BTC, and we'll try to squeeze as much profit from this move to the upside as we can. But at the end of the day, I do think there will be another move to the downside, which will be a huge trade in my personal view. This risk reward is like 2.4. That's not a great risk reward, right? But if your risk reward is, for example, this is a trade that we took right here. Let's just take this right here. We entered right here, stop loss just above that market structure higher right there. And our final take profit was at 5, right? These risk rewards, first take profit was right here. I did take that profit at a risk reward of, what was it? 2.6, somewhere around there, 2.6. And then my next major take profit was around 30% at 7.5. These are the types of risk rewards that are really going to substantially make or break your portfolio, because your risk is the same, right? Let's say in this trade you're risking 4%. Okay, you're risking half of what you would put in let's say you have a 10 grand account, right? You are putting 5 grand in this trade because you want to risk 2% of your total account, which would make sense. 5 grand into this, you're risking 2% of your total account, right? So then if that's the case, okay, you put 5 grand in this, let's say you have a 10 grand account just for simplicity's sake, and you're risking that 2%. What you could make is so substantial compared to the risk that you're taking, right? You're risking 2%. You're making 15% on a single trade of your total portfolio, and you're risking 2%. So these are the types of trades that you're looking for, is these higher probability major market moves that you're able to identify on the 4-hour, on the daily, on the weekly, not these little 1-minute time frame little pushes. You're looking for the major market structure moves that you're able to get these significant risk rewards on, that are able to go above 4, 5, 6. That is when you're really going to get those substantial trades, basically. And like in my opinion, you should take these smaller risk rewards because they are high probability, and you shouldn't be saying, I'm going to take a 3 risk reward trade no matter what the market structure is, no matter what the price action structure is, no matter how probable, no matter how dependable this trade plan is, I'm going to risk the same amount and have the same risk reward. I don't think that works. Every trade is going to be somewhat different, and you gotta shift your trade plan in order to fit the trade structure so you're able to extract potentially the most amount of money within that potential trade, basically. So yeah, that's going to be my trade plan. A little bit sidetracked in terms of kind of what we're looking for in a trade plan, but hopefully I gave you some insights as to what we're looking for, why we're not sizing as much on this trade compared to what we would size up on a major market break to the downside. Different approach, different psychology when you're trading, because it's not just looking at the chart, it's looking at other assets, other asset classes, taking global macro into factor, taking fundamentals into factor. There's a lot more at play other than just looking at the price of Bitcoin, to be completely honest. But yeah, that's going to be my analysis for BTC. Not a whole lot more to talk about on the price action. As we can see, we've been talking about this for a while, right? So Bitcoin has been holding a base. Yes, we have been seeing lower lows, but we're seeing less lower lows, if that makes sense. We're seeing a reduction in the rate of fall of the amount of margin trades that are open on Bitfinex, which is bullish. You're getting, less and less people to make smaller. Actually, that doesn't make sense. Okay, so basically, you're getting a squeeze in the amount of people that are looking to make long trades on Bitfinex, basically. I think it'd be a lot more simpler if we just took a picture. Right, so this is the amount of longs that are open on Bitfinex. So we can see on Bitcoin, we made a low right here, right? And then we made, well, actually, this was initially a low, and then we made a substantially lower low, and then we made a substantially lower low. So we're seeing aggressive lower lows come into the market. But after, what do we see? We see a base form, right? So you see a series of significantly lower lows, and then you see a lower low that's not even close to nearly as aggressive as the previous low, which is a positive sign. And then you're seeing another lower low, which is not that bad. And then you could draw a nice little trend line there because it's holding a little low. Like so, right? So that's our base. That's our nice little base that we're seeing. And if this was price action, this would be a really nice squeeze where we're getting both buyers and sellers to squeeze. This is the apex right here. The price has to make a decision, or the bulls or bears has to make a decision. The bulls won in this case. We got our first impulse move, our first major entrance of the bulls in the market. This is indicating that there are now more bulls, more buyers in the market who are using margin to enter long, meaning that there's more speculation long, there's more confidence to the long side. And for the short side, we're getting a little squeeze here. It's just a matter of if we're going to go long or short. If this squeeze goes down, this could be a short squeeze because a lot of people are still selling short because they have the same bias as I do, but they're too stubborn to change their mind and they're just shorting and shorting and shorting. If this starts to go up again and if this squeeze starts to go down, we could see a huge move on Bitcoin. Not like massive, but this could be the move that's going to hit it to $7,700 or $7,800. So, yeah, definitely keep an eye out for these two trends here, because if we do get a squeeze to the downside for the shorts and then we continue to see the buyers enter margin trades on Bitfinex, we could see BTC's price continue to rise, and that would be good because then we're just continuing to hold on to our profitable trade. We're up 7.5%, no complaints there. So that's basically the analysis on Bitcoin. We got a good entry and we're holding on to the long, and we're not really changing our bias until we see weakness, until we see failure in the bulls entering the market and pushing the price up higher and higher. So we're pretty happy with the situation we have right now, but we have to be flexible. We have to be nimble if things change. All right. Let's take a step back. I'm going to get a little bit of coffee, and then we'll continue on. Quick thing to let you know. We do answer every single question within TikTok and YouTube. So if you have a question, drop it in the comments below, and I'll be able to answer all the questions at the end of the video. I'm going to get a little bit of coffee, and then we'll go on to these alts here. All right, so basically, a lot of these alts absolutely boomed. A lot of these alts also had very similar structures. A lot of them had ascending triangle patterns, which is holding a horizontal level of resistance. As we can see on Ethereum is around 145, around there. And then once we broke out of that, seeing higher lows, we made the huge move to an upside. No pullback, no hesitation, really just a straight move up on a rocket, moving 17% Ethereum. Crazy move. I personally did not think that we would move that aggressively to the upside, but you know, I was definitely proven wrong. Looking back, really good entry for 147, somewhere around there. But you know, looking at BNB, this is kind of what I was thinking for a potential move for an upside. I didn't think it was going to be that much of an extension, so I didn't think it was going to be this far up, because we did see a previous support at around 160, as we can see right here. This level of 160 was, in my opinion, a key level of support that was going to be positioned to be a potential level of resistance. So not a crazy move, still an opportunity that could have been captured. But yeah, I was more just looking at Bitcoin because of the uncertainty. But hey, you know, I missed this one. Not going to fuss about it too much. I'm still making money on Bitcoin, but obviously if I entered on Ethereum or some of these other alts, I would have been making substantially more money. All right, so that's Ethereum. I'm not, you know, it's way late for a long, in my opinion. I'm not really going to be entering long. We got these series of descending highs or lower highs that's connected by a series of lows, which is a trend line right here. And then if we just put a projection at that zone, now we have a zone of confluence where we have a horizontal zone of resistance and support in confluence with a descending zone, which is creating our nice little zone of resistance. So that's around 180. But at this point, like I said before, I do think that Ethereum is a little bit, or basically all of these alts are a little bit late to the party. We're not really at a point where it makes sense to long. It's way overextended, and you know, if you didn't catch any longs, if you didn't make any money on the upside at this point, in my opinion, it almost makes sense just to wait it out and wait for that short opportunity. BNB, very similar. We're looking for something like this: ascending triangle, push to the upside, failure to make a higher high. Once it breaks that zone of confluence, we're going to be looking for a short. It looks very similar. We can see right there. How similar does that look? Pretty damn similar in my view. Let's draw it out, right? So we're looking for this. What is this, right? Initially, ascending triangle. We see a break of the resistance. Initially pretty bullish, but then we see a lot of hesitation at the high of that zone where it broke, and then we get a failure to make a higher high, and then we break a zone. We break the zone of confluence, which is the intersection of the ascending zone, the horizontal zone. Once that breaks, then we're looking for shorts. What does that mean for the current price action? We got a horizontal resistance, which is now a support at around, let's say, 1250, and then we have an ascending zone creating the higher low structure, which is going to create our zone of confluence. So looking at where we could be shorting around, if it falls below $13 for BNB, that's going to be, in my opinion, a really good opportunity to be looking for short, as long as it's still showing weakness from the buyers. So that's going to be my trade for BNB. Not looking for longs, mainly looking for shorts. That's going to be the only real trade plan that we have for BNB as of now. If it continues going up, we are not going to be trading BNB. We're not going to be looking at it at all, really, because it just doesn't seem like an opportunity yet. Link, huge move. Yet again, we were looking at this as well, seeing that nice squeeze in price. Let's get this anchor point. So we got our descending zone, descending zone, descending zone, descending zone. This is creating the resistance for our squeeze. And then you see an anchor point. You see 1, 2, 3. And once the price broke out of the squeeze, I was looking for an entry, but I was thinking, I'm already long BTC. I already have exposure to the long side. I don't really want to overexpose myself. And I did not think that we would get this strong of a bullish push from these alts, to be completely honest. Yeah, I was surprised. I was expecting Link to maybe hit this zone at $2.60. I was like, okay, that's a high probability situation. And I was looking for that little move there, but I did not enter. I was looking to enter, but I went to bed instead of waiting for a little bit longer to enter here. Should have been, could have been, but definitely you're not gonna catch every single trade in a 24-hour market. You gotta sleep, you gotta eat, you gotta spend time with people that you love, and yeah, if all you're doing is looking at charts and price action for 20 hours of the day, and you're sleeping for 4 and napping in the afternoon for like 3 or 2, that's not a very healthy lifestyle. I tried doing not that, but I tried being on the charts more, and it just is very difficult to manage your life if you have no downtime. You gotta have downtime in life. You gotta let your brain turn off to some degree for some percentage of your life, or else it's just too much. Especially if you're like thinking really hard about something, you need breaks. Your brain can't be turned on for 18 hours a day, 7 days a week, 365 days a year. Like that's just maybe you can, but I don't. I need some time to relax and recuperate from just mental stimulus, basically. All right, XRP is the next alt that we're going to be looking at. So XRP had that blow off top that we talked about. Huge blow off top, breaking above the resistance right here. But at the end of the day, my ascending wedge pattern still is in play. We can see right here. Very, very key zone. So we got to blow off top, but at the end of the day, I do think that we're going to come back into it. And the fact that we blew off the top and broke this resistance, for me, just there's more long perma bulls that are entering. So then when we short, it's just going to be that much more aggressive when we come back down. But yeah, XRP looks like a phenomenal short if it does break both our supports here, which one was a previous resistance, one was a support. Once it breaks both of those zones, so once it goes basically below, let's say 173.173, that in my opinion would be a phenomenal short that I'm going to be looking for XRP. Ethereum, or sorry, EOS, not Ethereum. EOS is the last one. Not anything crazy that I like. This is very similar to BNB in terms of the setup structure. We're going to look for the exact same thing that we saw right here. Not looking for longs, really, because we're already long Bitcoin. We already have exposure in Bitcoin. So, if we are more long bias, I would add to my position. I would. But because I'm more short bias on the long-term price action a Bitcoin, like in terms of the next month or two, I'm more bearish on Bitcoin than bullish. That's why I'm not adding to my position. That's why I'm not saying if it pulls back and retests the previous resistance as a new level of support, I'm really looking to long, because I'm expecting Bitcoin to potentially fail and continue downwards. And if it continues going up, if I never see that pullback, I'm making money from Bitcoin. There's not a problem, right? So yeah, that's basically the analysis that I have for the cryptocurrency market. I've been having this same bias for a while now. I did become flexible. I was able to shift my bias and take a long trade and make money and have no risk. So yeah, we're in a really good place right now. Who doesn't like having risk-free exposure to a volatile market? I like that. I'm sure every trader likes that. So yeah, we're just seeing how it goes. No profit taking just yet. We're seeing if it is able to squeeze a little bit higher, because we're still able to make those higher lows. Not really any sign of weakness in the market. So it's looking pretty good. We will notify the Performante Premium members of anything that we're really doing within the cryptocurrency market. If we're buying, selling, looking at entering, looking at selling, we will notify the Performante Premium members in that premium section. Also, quickly talking about it, if you don't know, we do have an entire Performante Premium section where we have day trading alerts, swing trade alerts. So if our team is entering a position for a day trade or a swing trade, you do have that on lock. Also, crypto markets, just talking about things that are happening in the market, as well as just some updates on what we're happening right here. We can see that the entry was somewhere, I don't exactly know. I think this entry was in some country. But anyways, we got global markets talking about SPX, oil, all that stuff, interest rates, what central banks are doing, what the ECB is doing, just more global macro. And then you got your PDF library and video content, which is actually going to provide you videos. We have a series of videos and books that's actually going to give you a really good foundation from really absolute no experience into how we trade, what are candles, what are patterns, what are we looking for, what are patterns, why we're looking for things we're looking for, and just basically an overview and a really in-depth breakdown of how we trade and navigate in the markets. And then you got like VIP general chat, you got questions. If you got any questions, put them there. So just wanted to give you a brief overview of what our Performante Premium members are able to have. Also, you do have a direct access to our entire team of traders. So if you have questions, concerns, want to talk about psychology, want to talk about difficulty of trading in volatile markets, different asset classes, we are always here to help and try to help you as best we can. So yeah, quick sum up. That was the end of the crypto market update. I will be going over every single question on both the YouTube and TikTok at the end of this video, but this is where I'm going to cut off the crypto market recording for the YouTube now. So thank you very much everyone for watching. If you did find this video useful, informational, actionable, if you found it somewhat entertaining or valuable in any way, shape, or form, it'd be greatly appreciated if you would subscribe to our channel, and that would mean a lot. So I will be going over all the questions now, but this is going to be the completion of the crypto market update. So until next time, happy trading, everyone.